Hello. So today I'll be discussing private company and public limited company on various forms of business. In the last video, I have discussed about various forms of business, and I too discussed about what is sole proprietor type of business, what is partnership, what is limited liability partnership. So today, I'm going to discuss what is private and public limited company. And you need to understand one thing, that these companies are defined by the law. Private company is defined under section 2 subsection 68, and public company is defined under section S2 subsection 71 under the Companies Act 2013. But there is another Companies Act also, which is 2015, and the basic difference is, according to Companies Act 2013, minimum paid up capital required is 1 lakh. For public it is 5 lakh, but according to 2015 Companies Act, the minimum paid up share capital of 1 lakh for the private, and minimum capital of 5 lakh for public is optional, and it is only mandated for the authorized share capital. So if a company wants to go for, increase the minimum cap of the capital, they have to discuss among the shareholders, and they should write an application to the registrar office. This is also very much important, that the shares for the private company cannot be transferred very easily, but public company has the luxury of, the investors can transfer the shares among themselves. And private company cannot invite general public, but public companies, they can invite general public. That is why they are known as public limited companies. So these are the basic definition and the differences between these two type of companies. So let us see some comparison, do some comparison between the private company and public company. So both the companies are, they have they are defined by the law, so they have a separate legal entity. This means that even though the members are no more, even after the death of the members, the life of the company will continue. The death of the members is not going to affect the life of both the private company and public company. So this is the similarity between these two. But as I have discussed, as we know that private company cannot raise money from the general public, but a public company can raise money from general public. So this is a slight differences. And this is the similarity, that the liabilities of the members or of the investors for both type of companies limited only to the extent of the capital which they have paid, or only to the extent of the shares they held. They are, the investors have paid. So it's not that if a company does not uh, make profit, then the investors personal property are not in risk. And this is similar for both the company. So for private company, there are lesser compliances, because as compared to public company, they have to go through bit lesser number of legal compliances as compared to public company, because public company have to go through various legal formalities. And since the companies are listed in National Stock Exchange or Bombay Stock Exchange or any regional stock exchanges, they have to follow the rules which are mandated by the stock exchange, and even the laws are mandated by SEBI, which is Security Exchange Board of India. But these laws are not mandated for the private company. And not all laws are mandated for the private company as compared to public company. So but the conclusion is that since we have discussed various forms of business, from sole proprietorship type of business to partnership to limited liability partnership, and now we have discussed the private company and public company, but the question is, which form of business is more efficient? But the answer is that no form of business is perfect, because the choices may vary from person to person. Some person may have a different choices, preferences, and they may like sole proprietor type of business, but it has some limitations. So they might go for the partnership to have some limitations, and then they might select LLP, limited liability partnership. And if they want to go further and expand the business, they can form a private company and ultimately public limited company. So it's not that a particular form of business is superior to other form of business. It depends on the likes and dislikes of a person who is starting a business. So there are various other factors like control over the business. Some people would like to have control over the business, might select sole proprietor type of business. And yeah, legal compliances, if we focus on the legal compliances, some people do not like to go through all the paperwork, so they may want to start a very simple form of business like partnership or a sole proprietor type of business. But so for some, the case may be different. They would like to grow the business, and they would like to attract more capital, and they are least bothered about the paperwork which they have to go through. They can handle the situations of all the legal environments, so they can go for the private company or the public limited company. That is not an issue for such kind of the entrepreneurs. So it defines the ease of doing business also. So if an entrepreneur would like to take the challenges and would like to grow, so they do not worry about all the legal works or anything like sort of. They want to control the business and they want to remain in a comfort zone, so they can go for a private company, LLP, or uh, public limited companies. So even flexibility. So some entrepreneurs, they or some business, they demand the flexibility in when the entrepreneurs, they're taking decisions. So if they are kind of forming a public limited company, then that flexibility does not exist, because they have to take decision in tandem with the shareholders or the board of directors. But for sole proprietor type of business, that is not required, because that is a one person is running the business, so that one person or an entrepreneur can easily take the decisions. So when we focus on taxation for sole proprietor and partnership type of business, the nature of taxation is very simple. But when it comes to public limited company or private limited company, uh, corporate tax and all dividend distribution taxes and minimum alternate tax, there's so many different types of taxes which it's quite complicated. So it depends all on the nature of the entrepreneur, what they want to what kind of nature that entrepreneur has. So uh, whether they're willing to take the challenges or not. And obviously, last but not the least, nature of the business. There are various forms of business, various types of business. Like there are small businesses like small fast food restaurants. So it's not required that public limited company form of business is suitable for such type of business. A simple sole proprietor or a partnership type of business will do. But for a bigger business like manufacturing businesses, which requires huge capital, forming a sole proprietor will not do. So they'll have to go for a more complicated form of business like a LLP or a private limited company or even public limited company, where they can attract huge capital from various sources. So this is not the last, but this is the kind of some factors which I have discussed. But there are other factors also which define the likes and dislikes for the various particular form of business. So I hope you are able to grasp the idea about the various forms of business. If not, then I suggest you to go through the previous videos which I have made on various forms of business. So this is one of the most simple video on private and public company, where I am not able to discuss all the points. But in the coming video, I'll be doing in-depth analysis on the private company and public limited company. Till the time, you stay tuned and stay safe. Wash your hands, and above all, have faith, because we are gonna win over whatever this corona is. So take care, stay tuned.